And welcome to another live stream with me, Rauchenwald, on this Monday morning. I hope you all had a great weekend. I guess today will be a shorter stream. We're going to cover my recent positions, and we're going to also, as usual, pay a little bit closer attention to GameStop. For those of you that are new to the stream, let's start with the obvious thing, the disclaimer. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, with that out of the way, those of you that are familiar with what I'm doing, great. Those that are not familiar, I'm using usually Elliott Wave Theory or the Elliott Wave principle to try to predict market movements and therefore manage my position based on that. Been doing that for quite some time. I would say I'm fairly good by now with Elliott Wave Theory, although there's always something to learn, so I would not consider myself a master. Either way, if you're curious about the Elliott Wave principle or the tools that I'm using, so broker, software, blah, 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 you can check the description down below, and there you'll find links to everything. You can read the Elliott Wave principle book for free online, by the way. With that said, let's actually jump into my portfolio. And actually, let's start with GameStop. So I just have to drag the charting software over here. So last week we had our stream until Roaring Kitty, aka Deep Fucking Value, aka Keith Gillen, I think is his last name, had his live stream, and then during that live stream, the stock tanked. For no apparent reason. There were a lot of trading halts, and I actually was surprised about those because in the past, or maybe I just didn't know it in the past, but from what I recall years ago, trading halts usually happen when you have like 5% movement within 10 minutes or 10% movement within 5 minutes or something like that. And we obviously didn't have those movements, for example, especially here. Yet there were a ton of halts, and they were so-called, what is it called? Loud. 1 second, gonna look it up. I have somewhere a saved post. Loud. Yeah, there, that's it. Yeah, so, or comment, yeah, so. Basically the loud halts, they're about like when if the national best bid equals the lower price band or the national best offer equals the upper price band, the market enters a limit state. If this limit state persists for 15 seconds, a 5-minute pause is triggered, which seems to be weird because from what I read, you could artificially or cause that on purpose by submitting orders that are outside of that band. Maybe not you or me, but if you're a market maker or like maybe even as an institutional investor, who knows, yeah. Because it creates a situation where the stock barely moved, then you have the next trading halt, which obviously, on one hand, it kills momentum a little bit. On the other hand, it gets people that don't know what's going on to panic and potentially sell. And it's definitely a little bit suspect. So GameStop ended up moving a little bit different from what we expected or from what I expected. So I thought that potentially we may have finished or may have had finished the correction already somewhere here-ish. However, it looks like the correction got a little bit further. So now I'll probably see it better on a 15-minute chart or so. Yeah, so now the assumption would be that potentially it's something that I pointed out in the last live stream as well as like, let's call it a possibility that we have basically wave 1, 2, 3, 4, 5 till here. Then that would need to be our ABC to some extent. And then we would have another 5 waves down here. They're going to be hard to count here, but that would indicate, I mean, we reached the minimum target for a wave C, and we didn't reach the, let's say, ideal target yet. However, it's possible that we bottomed here and now start to get our next 1, 2, 3, 4, 5, or in that case 1, 2, 1, 2, and then a stronger push. We'll see once the market opens, which happens in 6 minutes. Other than that, on other news, so I actually expect GameStop to go up. My personal positions, we sold a couple of $30 puts last week, so obviously that expired this Friday. So if GameStop closes below 30 this Friday, I would have to buy 400 shares at 30, and I got per option close to $600 premium. So my average would be $24 roughly. for those entries. And additionally, I sold two $25 puts, which would mean if GameStop is below $25 by the end of the week, or if it's during the week and whoever bought those options exercises them early, I would have to buy at $25, and I got another almost $300 per option here, which puts my average for those at a little bit above $22. So my average for both of them combined would be somewhere around $23 or so, or closer to 24. Doesn't make a huge difference. I think that we won't go there. Might be wrong, but then I'll get the shares, which is also okay, which means I could then just either hold the shares or sell covered calls. Although for covered calls, I would not go towards optimizing the premium or maximizing the premium, but I would go towards like, I don't know, like not. Yeah, I mean, depends on if it triggers and so on, but I probably, and which price we're at then, but I probably wouldn't sell a covered call below the $50 mark. Yeah. On other news, NVIDIA completed its 10-to-1 stock split. So now instead, okay, here the chart, local data, let's refresh that. Yep, now we have it. So now instead of being out of reach, especially when it comes to options trading with a smaller portfolio, it's now actually in an area where one can consider where one could consider trading the options, because just like the we don't have prices for the next 4 minutes, but just like the options used to cost a fortune, they are now also 1/10 of what they cost before, because everything got divided by 10 pretty much, yeah, and people got their shares multiplied by 10. Now, for other positions, so I also have still two put options in SPY. So we opened them a little bit, and actually not a little bit early. I think we opened them relatively okay. Let's go here to a daily chart. One of them is expiring today. That might be the tricky one, and that's 533 put option. Now I'm not sure if we'll get a performance profile here. Okay, let's open it again. Performance profile. Yeah, it doesn't seem to show us anything. Well, we don't have pricing. However, we can look into them here. So we have the 533 option for today. We can see, depending on the movement, the break-even price would actually be below, depending on, so at market open or right now, it would be at 531.74, and then it goes down to 531. So because we have to account for the premium that we paid, so as soon as we start to go below 533, we start to make money, but we paid a premium of 192. Is that correct? 192. We actually paid 189.80. Yeah, so that premium is. Okay, that's, it's counting the fees for the commission separately, yeah. So, but doesn't really matter, like plus minus $1, it's not a huge issue. So, let's see if that happens today. And I think overall that I got the right thing. It just might have been that the one that expires today was too early. Although I think that our June 21st will close decently at a profit. Right now, we would need to go below 532 for it to get into profit. So later today, Monday, yeah. So we see, so 532 would be the mark here to get into profit. We'll see how it goes, but I believe that we might have a correction here coming, and if that correction happens, then it depends on what we are correcting. Are we only correcting this part here up? Where do we have the low here? So are we only correcting this part here? I'll have to actually go to a 4-hour chart to at least see a little bit something. So if we're only correcting this part, then we might be in quotes shit out of luck and only reach the 532. And if we're correcting the entire part, then it might actually play out quite nicely. I could also be wrong and we go up from here, and that already was the whole correction. So we'll have to wait and see. And on top of that, my other positions, as we can see, so most of them are at a loss right now. So Immersion at -$1, GWAF at -59, NEO at -1, BNet at -43, and CRKN at -66. I still have to look into markets opening now. I still have to look into the the conditional orders so that I can set up the orders when and how I would like to exit them or set a trailing stop. Yeah, I have had not enough time, or just it wasn't a huge priority. Yeah, we can see that my SPY 533 put for today is still at a loss. We can see that today my GameStop puts, we can actually see that better probably. So as far as the options go, if we just look here, save trades. So you can see today's return. So my GameStop options, my FIFA options today so far bringing a little bit. I have to consider what I'll do with my $100 GameStop calls. So, I mean, I still expect it to go up. We'll have to consider they expire on the 21st, and on the 21st, we would need to be above 100 for them to be in the money. Whereas today, as we can see, even now we would be in the money and I could sell them. So I'm not sure how to handle them yet. If they expire worthless, it's okay, because basically I paid for them by selling put options. So the put options had a higher premium that I got versus what I paid for those. And those put options are already in the past, so they're already history. Now let's check GameStop, what's happening on the chart. Okay, so far we are going down a little bit. If we zoom in, so the critical price level here would obviously be this one at 26.13. If we go below that, then that's likely just ABC, and we get another 5 waves down. So that would be 1, 2, 3, 4, 5. Although even that till Friday shouldn't be much of an issue. And I said, even if I get the shares assigned, my average should be somewhere around 24. So that's something I can live with, especially because then I can sell the June 21st call options. As we see, the premium is ridiculous right now. So if we were to fall by $4, it would be the same as so if we fall to 24, then let's assume 20 and we would want to sell the 31. So 1, 2, 3. So 34. So we would still potentially get a couple $100. So if I get 600 shares assigned, and in quotes the worst case, let's say $500. So I probably could still then, if I sell the 30 call options, still pocket around 3,000 in premium for next week. And if I go higher, so if we say then 44, even for those calls, so it's still decent premium. Plus, if we then rally up, profit on the shares on top of that. So yeah, I mean, that's assuming the volatility is high enough. And obviously, while those 4 days till June 14th pass, the prices or those options will actually get cheaper. I mean, cheaper in terms of if the price stays the same, yeah, because the option price always depends on the volatility, the current value of the stock, and the time left. So as the time left progresses, we'll receive less premium for the options we sell. Yeah, so that's pretty much how it works in that direction. What else do we have? Yeah, my UBS options are now in a profit at 103. So UBS has dropped a little bit. I expect it to drop more, and my thesis is actually here tied to GameStop. I said, if it's true that Archegos Capital had a huge GameStop short position that basically Credit Suisse ended up being the backholder for, and then Credit Suisse got bought by or taken over by UBS, and now UBS has that position. Therefore, yeah, party bus. Therefore, a huge increase or a noticeable increase in GameStop should maybe cause a substantial drop in UBS, which would then pay out through those put option or through that put option. We got 10 of those. Yeah, we got 10 of them for a total of around $370. So I think that's good. And yeah. Now, overall, it looks like things are moving our way from, if we look at the prices, so our 25 put options made $100 profit, or like a theoretically unrealized profit today of $100. And our 30 put options also seem to slowly move into profit. My SPY puts, however, that's going to be the question, like what's going to happen to them? So how is SPY going to move? Are we actually going down or not? So that's going to be the big question to wait and see for. If yes, then yeah, it's going to be a nice day. If not, then at least that one option, so the SPY 533 put will expire worthless and cost me $200 or $190. And then that still leaves the where do we have the other one? The June 21st SPY put option that may or may not end up in profit. That one was more expensive with $470, although we still have a week longer to actually, so we have 11 days left on that one, which means unless we have a huge rally up, I could also sell it earlier, but I will probably keep that one, both of them till the end, simply because I think it's possible that both of them will, I mean, for the one for today, there's no point in selling it for like a $75 loss. Either market moves down today and I'm right, then it goes into profit, or it doesn't. And then the profit especially also could be, so if we circle back here, SPY put for today. So the profit then, depending on the movement, also could be, if we, for example, would fall to 530, yeah, it's not a fortune in comparison to what we paid for it, because it was like a 2-day option instead of like 0 DTE. But yeah, like, so we'll see how that goes. And I think with that, we've covered everything. All the other shares, so like BNet and whatnot that I'm holding, I don't hold a lot of it. I was thinking about getting into SunPower, but there I feel like that might still be, there might still be a correction. And so maybe I'll look into the option side at some point. But on the other hand, we already have a bunch of small positions in some, like in quotes, gamble stock, like GRAF, CRKN, like that's, and Pewdie, yeah. So not sure I want to throw more into those at the moment. Other than that, I think what we can also do. So performance since I switched to Interactive Broker has been quite okay. So we see that's where I switched. I mean, if we look longer, it looks a little bit different because I had a small balance, and every month then 5% of that balance were paid just for the data feeds, which makes the long-term graph look ridiculous as performance. However, when we look at when I actually switched to Interactive Broker to actively trade, we can see that the performance has been quite nice. We were up on Thursday almost 60%. Then Friday we took a hit because obviously GameStop went down a lot. Right now, or this month so far, still up almost 18%. So that obviously cannot continue forever, and it's mostly caused by the high premiums that we get from selling the options in GameStop, which obviously you should only do if you, first of all, have the cash to pay for 100 shares, and second of all, you're willing to actually, or you would be happy or okay with actually getting 100 shares at whatever strike price you are selling at. Other than that, even for this week, if we look, if right now you would sell a $25 put option, you would roughly get $240 at the moment. So if you wait a little bit for a small drop, maybe you get 250. So that's like 10% on your money for 4 days. So if GameStop finishes the week above 25, you made a 10% return. If it drops below 25, you have to buy 100 shares for $2,500 minus the 250 that you potentially got in premium. So your average would be at 2250. But yeah, if you're okay with that, then I think that selling the 25 put still offers a nice payout. Yeah, I was lucky in quotes that I was able to sell them last week when the price was lower. So as we see, I got almost $300, so $40 more than what you would get right now. But that also only matters if we stay above the current levels. Right now we seem to get a push down. So it's also, I think the worst case scenario would be that the whole thing down here is somehow wave A. So then we would have to zoom out a little bit to put that into perspective. So that basically, so let's get rid of that. So that basically, while we are correcting 1, 2, 3, 4, 5, so we're correcting those 5 waves. Theoretically, we could go as low as 1770 before that pattern would become invalid. So where we assume this is 1, 2, 3, 4, 5. The next mark, like if we go here below, what did we have here? The low is at 2612. Then the next mark would actually be at 2357 for a potential turnaround to the top. Although then the question would be how that is the full corrective wave. So we'll have to wait and see how it plays out. It's going to be interesting to watch, and yeah, like depending on where we finish. So I hope, I'm actually fine either way. So on one hand, I hope that we're above 30 by Friday, because this way I just pocket the, what was it in total? So like $6,000, no, $3,000 premium. So 600 times 4 plus 300 times 2. And that way, obviously, I could just then for the week after that sell more options and again make my potential couple thousand. So which in that case would be free. That would be 20%. So I have around 15,000 in the account. So getting 3,000 in premium in a week would be around 20% return for a week. On the other hand, if we are below 30 or even below 25, then I said I get the 600 shares and can then just sell the call options for next week, which also paid still well. So yeah, I'm a little bit in a, I don't know, like in a, yeah, like in a spot where I really, no matter which way it goes, on one hand, I might have a slight preference to finish above 30, since we also have the 100 call options, and I have some shares at computer share. But on the other hand, if it goes the other way, I just get hundreds of shares more. Most of it paid for by premiums from selling options the last couple of weeks, or at least a third of it paid for by options premiums. So yeah, like gonna be fine either way. Yeah, the only thing that I would in quotes hope for would be for today for SPY to drop. Right now it's in the red, but we don't know how it will finish. Simply for us to, or for me to make a profit with this put option. But if it doesn't happen, it doesn't happen. It's also fine. So I think, yeah, like we'll see how it goes. Yeah. Yeah. Other than that, is there anything else to cover? Okay, that's not the one I wanted. We have a longer history here. Okay, so that's not the HEI I wanted. What's the next thing that expires? So it's today the SPY option, and then actually Friday the GameStop, and then on the 21st, next Friday, we have a couple of things that expire. I think my PK option will expire worthless. You can see I paid $19 for it. It's an $18 loss. I really thought, we can look at the chart, I really thought that here we will get the upwards momentum. I still think so, but it will not happen in time. So it would need to happen next week for it to end substantially, which I doubt. So I think that one will expire worthless, which is okay. So a $20 loss. But I still believe that overall there will be an upwards movement. I think, I mean, might not recall it properly, but I think I measured based on this movement that potentially here is already our correction finish. And looks like I was wrong. And I mean, either the pattern overall is going further down. It's possible that the whole thing here is A, this is wave B, and it goes even further down. We'll see, but I'm not gonna cry for $20. So this was just something like, okay, if I'm right, we get a payout, and if not, I mean, $20, yeah, it's not the end of the world. Yeah, FIFA, where is it now? At 57 cents. So we're still at a profit there because our $1 put option would trigger and I would have to buy. Although I only paid, or I got $50 premium, so I get 100 shares instead of for $100 that I have to pay effectively actually for $50. And the 0.5 put is out of the money, so we get $20 premium here. So theoretically, if we stay above 0.50, then considering the premium, I would get 100 shares for $30, and it trades at 50 cents, so I can still sell it for a net profit. Or I could hold the shares. Either way, like, I don't expect it to go anywhere, to be fair. But if it's yeah, like $100 that I have to drop on the stock in quotes, from the pattern, it's possible that this is either 1, 2, 3, and we get wave 4, and then we get wave 5. So if I get the shares, I'm kind of okay with it. It's also possible that it was just some fluke and we rally further down. But yeah, so I guess it depends if both options trigger. So if I have to buy 200 shares for $150, no, even for $150, I would just hold that and see how it plays out. Especially since it's a heavily shorted stock, and I'm also participating in the stock yield enhancement program, which means the shares that I hold in this account can be borrowed, and I get 50% of the short interest that whoever borrows them to go short pays, which means it's kind of like getting a little bit, yeah, like of passive income. on top of holding the shares. And for those positions, I mean, for GameStop, I don't like it, but there again, my main long-term position is at computer shares. So if I have a couple shares here, even if all of this triggers and I end up with 600 shares, it's still okay for a couple of weeks to have it like this. And yeah, just a second, have to submit. Still says no. Okay, still says not arrived. Okay. Yeah, so for GameStop, I wouldn't want that, but if it happens, it's also okay. So, and yeah, with that, actually, yeah, one last thing, or not one last thing, but what else did I want to mention? Like two things, actually, I think. So one of them, so I watched Keith Gillen, I think really his last name is Gillen. I will have to at some point remember that. Yeah, live stream, and I liked it quite a lot. So I mean, obviously he didn't share anything about if and when he plans to exercise his options. He pretty much what he did, and I think it was really cool, was the only stock related thing was to say, hey, look at this giant. So look at how we dropped till here and now we bounced here as well. Basically look at this giant bull flag where we have the breakout here, that he's still bullish, that he believes in the transformation, that basically his first thesis that with the in quote short squeeze or at least sneeze, whatever, played out, and now it's the second part of his thesis that the company will make a transformation. Yeah, it was interesting to watch. What I also liked and didn't know or didn't even think about, but now thought about, was like the Magic 8 Ball that he has in some of his streams. I went ahead and ordered one too because I think it's really, really cool. Like more or less just to get a funny second opinion. Should be here in a week or 10 days. Gonna be interesting or funny to use that, at least for me. So yeah, but credit goes to Roaring Kitty for bringing up or inspiring me with that idea. And yeah, like other than that, I think we have nothing to cover in today's stream anymore. Like, I mean, we could look in the individual positions, but I have to do that anyway separately. And so to then decide where, for example, I would want to get out of NEO. So my stop loss, where my pattern or my assumption of a pattern becomes invalid, where I want to sell. At which point I would want to have a take profit, and should it be trailing or whatever, yeah. Yeah, so that we can do in another stream or that I can do outside of the stream. And yeah, I guess that's then it for today. I mean, it's not a super long stream, yeah, but I think that's then really it for today. So there is no point in, I mean, we could chart gaze GameStop, but I have a few other things that I would like to get done as well. Just like last week, if we would get some drastic movement, especially in the upwards direction, I may come online again spontaneously later. But other than that, I think there is no reason to just stream the chart without providing any other insight. Now, what else was there about the live stream of Roaring Kitty? Yeah, actually not much. I mean, everybody's looking at the stream and trying to find meaning in every single thing he did. Maybe there is, maybe there isn't. Doesn't really matter. Like, gonna be interesting to see if this week GameStop announces that they already finished the share offering. There is a decent chance, although no guarantee, that they sold the, what was it, 75 million shares already here. So there was the volume for it. It's possible that they did it. And if that's the case, they would have gotten an average, I don't know, from maybe, let's say $30 for 75 million shares. So bring that over, yeah, $30 times 75 million which would add another 2.2 billion to their balance sheet. So which would bring their cash on hand to around $4 billion, which would pretty much make them profitable just based on the interest. So the interest would cover their business expenses unless they use the money for an acquisition or blah, blah, blah. So I think it really kills any kind of fear thesis, so that you say, okay, the company will go bankrupt or whatever. If they just keep the business the way it is, as said, their interest covers their expenses, which means it's easier for them to be profitable. If they close more stores, maybe there are still some unprofitable stores. So if they get rid of more unprofitable stores alone, it would already also improve the company situation. And if they acquire, I don't know, like some fitting company, it would also work very well potentially. But I think it's, unless they have bad luck combined with bad decisions, so like acquiring the wrong businesses for too much money, I think it's impossible for them to do bad, which means long term the stock should go up, which is also the reason, at least in my opinion, but which is also the reason why I wouldn't mind if I get shares assigned this week, and why I then would say, okay, I would sell the calls likely only with a decent profit. So not based on what's the highest premium, but based on like what's a good premium, but also a price I would be happy to get rid of those shares. As said, for the shares that I have at ComputerShare, I have a Google sheet with different price levels where I'm willing to sell 1 share, 2 shares, and so on. But the sheet and the price levels I will not disclose. And there we'll just set the limit orders if I'm right, and as the price moves up, and then sell them independently. But for everything I'm doing in Interactive Broker, that's really just to, in quotes, make as much money as possible while still keeping the risk reasonable. And the main reason why I'm actually trading GameStop here in that account is because it's the highest, or the stock with the highest implied volatility, which means also with the highest premiums. And it's on top of that, I don't mind holding, which is an important part when you sell cash secured puts. But so I think that's it. We covered everything. So far, most things move in our way, so our calls are still in profit. Like the puts are at a small loss compared to what we paid for them, but that would still, right now, GameStop trades at 27. So, and for those puts, my average would be at 24. So still profitable, just not as profitable as they could be. SPY is going to be interesting, as said, but also no point in just watching. Either it's gonna get the downward movement that I expect it will get, and it gets it today already, or it won't. Beauty, interesting. Basically recovering what it dropped last time. Although tricky, because that could turn into a big A, B, C, then it would actually go down further. However, we hold the shares here and it would then go up from here. So if we take a $10 loss till here, I mean, it's so cheap. I literally bought 20,000 shares for $50 or $53. So but it's moving today at least a little bit. Everything else seems to be red. BNAT is green. Okay, there we also, but our entry is higher. So, and let's see how it goes. So, how and if I'm right, and how right I am in those cases. It's nice, I have to say. So that's the last thing for today. I have to say, ever since I jumped into options trading, let's switch here. So ever since I jumped into the option side and selling cash secured puts, trading became way more relaxed, because it's not like buying or opening a position and then you need to have the asset move in the right way. So if you go short, you hope it goes down, and if it starts to go up, you have to worry about your stop loss, especially if you use leverage. So if it goes up too high, your position busts because you don't have more money to keep the margin requirements. Whereas with the options, you have some of them obviously would have infinite risk, but the ones I'm using, so selling a cash secured put, I have a limited risk. So if the price drops, worst case, I have to buy shares of a company I'm willing to buy shares in anyway. If the price goes up, I just pocket the premium. So, and in between, unless the options gets exercised prematurely, but in between, usually I don't have to care about the movement at all. Same with put options. So I got the SPY put option, and since I bought it, I'm the one that can exercise it. So the only thing that matters is like, where does it stand at the end? So at expiration, and until then, I'm the one that can sell it for a profit. With SPY, there is no exercising it in that case, or there might be, but I think they're only cash settled. So exercising would be the same as selling it probably. Yeah. And so I really like that side because I can have relatively big positions. So right now we technically have the entire portfolio invested. So in terms of commitments that we have made or that I made with the options, but I don't have to stress out about it because because like even if I'm wrong, so even if GameStop drops, for example, it's not that suddenly I look at a thousands of dollars realized loss, but the worst thing that can happen is I get 600 shares at a specific average price, and those 600 shares then are going to still have a certain value, and I can sell cash covered calls again, or covered calls, so not cash covered, but they're then covered by the shares, calls against those positions. And with those calls, I can then again earn a premium. The only thing is, and it doesn't work that well with stocks that have lower implied volatility, because then if it falls to 20 or so, then you don't get enough premium for selling a $30 call anymore. But with GameStop, we can see even if it would be $10 lower, so that would be, let's say, selling the 42 call in comparison. So if the price would be $10 below, so around 20, as long as the volatility stays roughly where it is, it would still potentially bring a couple hundred per call option, and I could sell the call option still at a level that's higher than what I paid for them. Anyway, as said, so that's it for today, because unless we really get to see a nice rally in GameStop, there is not much point right now to keep the stream going. We covered all the positions that I have, or at least those that make sense, and looking forward how the week goes. As I said, my expectation would be SPY is dropping. GameStop should go up, but my pattern might be wrong and we go down further. So, I mean, I know it sounds ridiculous, like either it goes up or it goes down, but right now there's still two valid options on the chart, at least for me. But either way, I'm okay with how it will play out. So either I'll just pocket my options premium, or I'll get shares and still pocket at the options premium. And for the rest, we'll just have to wait and see. So Akashi, hi. Oh yeah, you came at the very end. So I'm not sure if the alerts on Discord are, I think they only share or post. Oh no, it's already posted. But I think there's a delay with the posting, so it's at 3:18. Oh no, actually it posted on time, so that's nice. So, but today there is not much to cover, but I'll guess tomorrow or the next couple of days we might have a longer stream again. Anyway, thanks for stopping by, and see you all in another stream, potentially tomorrow around market open. Don't forget, if you haven't already, like, subscribe, enable notifications. And with that, I'm gonna say bye-bye. See you then.